talk about the markets. Let's get in a special voice in, talk about the specifics as well as the outlook thereof. Jyoti Vaswani, who's Chief Investment Officer, future Generali India Life Insurance, joins in with her perspective. Jyoti, it's great to have you on the show. What is your overall market outlook at the current juncture, given where valuations stand?
So I think if you look at the markets, they seem to have gone up by 10-11% calendar year to date. But if you look at the 2-year return of the markets, the return has been around 2 to 3%. So clearly over the last 2 years, markets have not given that kind of return. So it just appears because in the last few months we have seen a sharp rally in the markets. The other thing is about valuations. I think valuations are around 18.5 times forward earnings, but as in the last 3 years we've seen that earnings have not really gone anywhere, and given that the valuations do look a little on the higher side, but when you are at the bottom of a cycle, I don't think it's the right way to look at the PE multiple in a standalone basis. If you look at the EBITDA margins, the EBITDA margins probably are significantly lower than the long-term averages, and it clearly shows that the cycle, we are at somewhere at the bottom of the cycle. So therefore, when you are at that stage of the earnings cycle, it becomes, the multiples do tend to look a little on the higher side, but once the growth comes in, the multiples will look much more reasonable, and I think you will see that reflecting in the stock markets and the stock prices going forward.
Jyoti, IT stocks rebounded in today's session, but they've come under a fair bit of pressure, not for this week or fortnight, but for almost 2 months now. They have a portion, you have a large portion of IT in your portfolios. Are you nibbling in more at these valuations? Some are calling it trough valuations. Are they?
So the IT sector is facing multiple headwinds as of now. The last year has not been too good, and this year we've had the additional challenge of the rupee appreciating. There are the H1B visa headwinds which were very strong till some time back, and thankfully, thanks to yesterday's Trump's statement, I think it is possible that the H1B problem will be pushed by 6 months to 1 year, and therefore it appears that this year that problem may not really come up. And as far as the rupee is concerned, the rupee has appreciated significantly by around 5%, and we do believe that the dollar has weakened, but given that the US economy is looking strong and is expected to grow, the dollar should only strengthen. Given that, in addition to that, we also have a very strong we have a current account deficit which is very manageable, and therefore we have huge inflow of money in the first quarter, which also caused the rupee to appreciate. We got around $12 billion between equity and debt in the March quarter, and that was a lot of it to do with GAR provisions, etc. So that should also get normalized now, and therefore the pressure on the rupee should ease. With that, we think that's two of the headwinds which are there would kind of get a little less as we go forward. And if you expect US to grow, we are also getting sense that US is looking at higher budgets for their IT spends, and having said which, I think the volumes should start looking a little better for the IT industry. So while the valuations are at the real bottom levels now, but we think that they are value picks, and from here on things should improve for them. And I think also what the IT companies are doing is also trying to do buybacks, etc., to ensure that there is value created for the shareholders, and that is going to provide some support to these stocks. So overall we believe that we are neutral on the IT sector, but I think things should start looking better for the IT sector of a few months down the line.
Let's also talk about the real estate and even infrastructure stocks. Last couple of days, they got particularly excited even after news about InvIT and restructuring. All of those start hitting in select pockets. What's happening there? Do you think this area looks interesting now?
Yeah, so we're very bullish on the infrastructure theme, and we think that infrastructure has not really played out in the last 3 or 4 years. But from here on, I think there is a lot of this is a sector which will now lead the recovery, and we would see from here private capex also starting to pick up with a small lag. We're seeing the government already focusing on roads and railways. There's a lot of action happening on the metros. There are a lot of power reforms which have happened, and a lot of action happening on this side. So we are very comfortable on these plays, which are largely plays on defense, roads, railways and metros, and we think that infra is a theme which will play out probably from FY19 onwards.
Right, what about cement? How are you positioning yourself within that sector, Jyoti?
So the cement sector went through a bad patch post demonetization, and we've started to see the March was much better, and we're seeing the pricing power coming back in April. And cement will be the biggest beneficiary of affordable housing, will be a biggest beneficiary of the infrastructure spending which is coming in. And we think that cement sector is a sector which will be the one of the key sectors which will do well going forward, and we are pretty bullish and overweight on the cement sector.
What about metals? They've seen a correction. Does it matter to look at these times to buy into some of those stocks?
I think the reflation which is happening globally is what is benefiting these commodities, and I think the metal prices are a reflection of that, and the metal prices have gone up 30-40% from the lows. In fact, some of the commodities like steel, etc., have nearly doubled from the lows, and I think that is reflected in the reflation which is happening in the economy. And despite the correction, we continue to believe that this is a sector which will do well. We are more bullish on the non-ferrous sector than on the ferrous sector, because there are a lot of headwinds there in terms of higher coal prices and higher coking coal prices, which could impact the margins and prices on that side. But we are more bullish on the non-ferrous side of the metals.
Jyoti, it's great to have you on the show. Thanks very much for taking out the time to speak with us today and make sense of the markets. Time now to keep it with more market opinion for the benefit of our viewers. Here, Bharat Iyer of JP Morgan remains constructive on the Indian markets. He believes markets will consolidate for some time in the near term. He